Ever wonder why treasuries and gold rally together? It's simple. Stress sends cash to bonds, yields fall, and real rates shrink. That's when gold shines the brightest. Stick around for the quick playbook on this dynamic duo, and let me tell you why we still prefer hard money over the rest.
So, Cash, and let's talk about our educational topic for the week. You were the one who picked it out. It was a good one. We're going to talk about why gold and treasuries rally at the same time. Why are they correlated?
So at a high level, we both know, or we know that a lot of people kind of consider both of these assets to be safe haven assets. People typically flock to them in times of economic uncertainty. So we definitely saw this kind of recently in that initial COVID shock. Gold was rising, treasury yields plummeted to an all-time low as investors were expecting rate cuts. And overall, this kind of happened at the same time. So gold is often talked about as an inflation hedge, and for a good reason. Historically, it's really good at preserving purchasing power during times of inflation, sometimes even increasing it. And it's a real asset, so it doesn't have things like credit risk or default risk. And supply is limited. Supply doesn't just increase like the U.S. government can print money, so it's only increasing maybe 1-2% a year. On the other hand, treasuries are often considered the world's safest paper due to being backed up by the U.S. government. And while that is true, the government can always print more money and pay back those treasuries. Lower yields sometimes aren't the best investment to make. A lot of times, investors will flock into these investments when yields plummet. But when that 10, 20, 30-year treasury finally matures, in those yields might not compensate for the purchasing power that was lost during that time. So, you know, overall, treasuries protect or tend to protect investors in like deflationary or disinflationary environments. Gold is more of an inflation hedge. So, in times of uncertainty, when it's not clear which risk is the most abundant, investors will hold on to both. So, this is what makes them pretty good complementary tools in portfolios. Um, you know, during times of economic trouble. So that kind of explains why during those times investors will put in a lot of capital into these tools, and it kind of creates these joint rallies between the two.
All right, Cash, and I think that's a great explanation. I'm going to add a little bit to what you're saying. First of all, I think you did a great job talking about gold as something that people can hold. The key thing on gold is it's one of the few financial assets that's nobody else's liability. If you're holding gold, you're holding gold. If you're holding treasury paper, right? If you're holding government bonds, then that's somebody's liability. Now, the government can certainly print more fiat dollars, and they will, and that's what they do. So you're going to get paid, but the key thing with gold and also with Bitcoin is it's not a liability for somebody else. Um, so what will often happen is during times of economic and financial stress, people will have this flight to safety. And as you pointed out, the treasury bills are backed by the US government, which, funny as it is really the best place to be in times of stress if you want to hold fiat. And so they buy treasuries. When they do that, it pushes up the price of treasuries and reduces the yield, right? Now, gold as a financial asset that has no yield, all of a sudden, the spread between gold's 0% yield and a treasury lower yield becomes smaller. And that makes gold relatively more attractive. So people will buy gold in those circumstances as well.
Yeah, those are some great points. I totally agree.
All right, good.
Gary, anything
Um,
else?
yeah.
Anything else you would add to? Just I know over the last couple of years, obviously inflation has been at the forefront, right? DKI from a portfolio position standpoint, heavily invested or has been invested in gold for some time now. I mean, what's future outlook for you? Kind of what are signals that you're focused on in today's environment?
So, Rob, that's a great question. And the key thing is the hardest money is always going to win. Right now, in fact, um, as of the last Bitcoin halving, Bitcoin is harder than gold. So the supply of gold increases about 1.5% a year. Bitcoin is actually harder than that. So my largest position is in Bitcoin. I own a large gold position, which is more than doubled since we put it on. DKI subscribers have done really well on both. And I don't own treasuries. And the reason for that is because the US government is overspending by 3-4 trillion dollars a year. That's on balance sheet. Another 3-4 trillion dollars a year off balance sheet. So overspending by a total of 6 to 8 trillion dollars a year. That's real money on a roughly $30 trillion economy. So what I think is going to happen with treasuries is you will get paid on them. The government will pay you, but I think the purchasing power of the dollars you're going to receive is going to be lower. And as a result, I think when we look at real return, treasuries over the next 10, 20, 30 years are going to have a negative return. That's why we don't own treasuries, but we own huge amounts of Bitcoin and gold, a little bit of silver as well.
Yeah, exactly. And I mean, we keep having this conversation, right? It's not about whether Bitcoin's going to be 15,000, 50,000, $1 million, $1 billion in terms of price. What is going to happen is the dollar will be worth less and you will be able to purchase less with the dollar. Gary, I think we'll put a stamp on that one. Cash in
Nailed
anything
it.
else you would want to add?
No, I think that's about it. I think I really liked that kind of outlook on how, gold is no one else's liability. So whenever you have treasuries, it's more than you being able to pay for the treasury. It's the US government being able to pay it back to you. So kind of like how you put it out there that, gold
Yeah,
is no one else's liability.
makes you think twice about those things, right?
Yeah. Yeah, exactly.
Yeah. Yeah, it makes you think twice about those things. Well, Cashin, hey, thanks so much for joining us. Cashin, for those of you listeners that don't know Cashin, would you mind doing a quick introduction, who you are, what you're
Yeah.
working
Yeah,
on
sure.
to our visitors? We are live as well across the globe.
hmm So yeah, I'm a sophomore at the University of Tennessee. I'm from Tennessee, from Middle Tennessee area, and yeah, I'm majoring in finance and accounting. So a couple things I'm just really big on are I love traveling and um, you know, being dedicated in school and kind of just exploring careers in finance. So yeah, it's a little bit about me. But yeah, thank you guys so
Yeah,
much for having me.
Yeah, of course,
glad to
Cashin.
have you. And
Yeah.
Cashin, worth pointing out to everyone watching, Cashin does a ton of work every week on the five things. He's one of the big heavy lifters here. So if you like the content, round of applause for Cashin. He talks about traveling, but this guy really does it. A lot of people talk about doing things. Cashin constantly, he gets on a plane, goes places on his own, similar to what I did when I was his age and a little bit older. So, we love to see our interns traveling and experiencing the world. Great job, Cashin.
Yeah,
Cashin,
appreciate it.
where's your favorite spot? What's at the top of the list right now?
Oh, I
That I've
know
been
this one.
to?
Yeah,
Uh, I'd say either Croatia or Japan. Those are both really cool.
nice, nice.
So
All
yeah.
righty. Well, thanks,
Mhm.
Cashin. Appreciate all you do. And yeah, thanks for the support. And yeah, it's exciting to see what you're gonna do moving
Yeah.
forward. So thanks so much,
All
Cashin.
right. Hey, thank you so much.